Good morning, friends. I'm Pooja Gandhi from Kirin Advisors. Welcome to the virtual IPO roadshow of Kontor Space Limited. Incorporated in January 17, 2018, Kontor Space Limited embarked on its journey under the name. A significant milestone was reached on July 19, 2023, when its official transfer into Kontor Space Limited. Joining us today, Ms. Kanan Kapoor, Managing Director. Welcome, ma'am.
Thank you so much, Pooja. And I welcome everybody, all our potential investors and to be shareholders on our virtual roadshow for the IPO. Welcome everyone.
Mr. Jignesh Doshi, co-founder Srujan Alpha Capital Advisors Limited.
Hi, welcome everyone.
Welcome, sir. Mr. Govind Sabu, co-founder Srujan Alpha Capital Advisors LLP. Welcome,
Good
sir.
morning. Good morning, everybody, and thanks for arranging this call. We welcome all the investors and potential shareholders of our company, and uh, let's look forward to a interactive session with them.
Now I would like to request Ms. Kanan Kapoor to give detailed presentation of the company. Over to you, ma'am.
Sure. Uh, so we'll run through the presentation now. So Kontor Space Private Limited was started in on 17 January 2018. And as Pooja mentioned, we underwent a name change recently, and now we are Kontor Space Limited. We actually started off with our flagship center in Thane, which is spread over almost 29,000 square feet and has about 720 seats. Presently, we are spread in four different locations, uh, namely Thane, Pune, in BKC, and in Fort in Mumbai. We have a total number of 1,200 plus seats, and we have more than 150 clients, which includes a mix of MNCs, startups, and MSMEs. In fact, a large portion of our clientele are MNCs at the moment, which comprise to about 70%, and the balance is a mix of the SMEs and the startups. We'll go over to the next slide. This is the journey of our company, as we mentioned. Uh, we started in 2018. Subsequently, we started our Thane center. Then we started the Pune center. Uh, and then we started the Fort center. And then we have our center in BKC. Now, to go a little bit more in detail on our business in general, can we go on the next slide, Pooja? Thanks. So the focus is on an asset-light model. Uh, we don't, the fact that real estate has peaked in general, so we prefer going asset-light in terms of leasing out properties. Uh, our locations are extremely strategic. In fact, Thane, we were the first people to start a co-working space in Asher IT Park. That was in 2018, and that has been our flagship center till now. Subsequently, even the Pune one, which is in Manavri, is in a very strategic location. In BKC, we are there in a flagship building here called One BKC, a very popular hotspot for all businesses. And in Fort, we have a 60-seater, which is our own place. We Our focus is to go in, we actually position ourselves as a premium economy and affordable brand. So the idea is to give the best facilities and services to our clients, be it the ambience, be it the Wi-Fi, be it the pantry, and the overall air conditioning, admin, all the other facilities uh, at very affordable prices. And that is what our key is. We try and optimize in the space. So on an average, we utilize about 30 to 35 square feet per seat. And I think that is what is able to even make us very cost effective. Uh, of course, our company has been founded by a female, and currently also there's a woman sitting here as the managing director. We believe in promoting MSMEs and being one ourselves. We are looking forward to be a pioneer in this space. Let's go to the next slide. So this again, just talks about the overall vision of the company. In fact, another idea for us to go into IPO is because that kind of also adds to our credibility. We have anyway been extremely prudent in terms of our accounting, financials, etc. But coming out and going public kind of just adds to it and also adds to our credibility. Let's go to the next slide. So this talks about a general overview of what kind of spaces we offer. We have dedicated office spaces. In addition to that, we have shared working spaces. We also have confined office spaces, and we also actually provide virtual office, which is something which is also very interesting product. So a lot of companies, need a proper address. They need people who are working from home. They need somebody who can answer calls for them, a place to receive mails. So that is a very popular product. And we also do managed offices, which is not mentioned here, but that is something which is our Fort office, for example, is a managed office. So what happens is many companies don't want to put in the capex for fit outs for the space, but they want to move into a ready office. They have identified the office and they want somebody to come and manage it for them, and that is what we do. So we come in, we do the fit outs, we take care of the admin, we take care of the housekeeping and all other services that they need. And it becomes a lot easier, and plus it becomes very cost effective for the company. A company ends up saving anywhere between 20 to 25% once they move into co-working space or into a managed office space. Let's move to the next slide. As I mentioned earlier, these are our four centers in Thane at Asher IT Park. This is our largest facility actually. Subsequently, there's the Pune one, which is in Manavri, in Kantilal Parmar Commercial Towers, and then in one BKC in BKC, and then in Fort and Peninsula House. Our average occupancy is in the range of 80 to 85%. Fort, of course, is 100% because that's a managed office. Uh, let's move forward. So, just to give an overview of the promoter is Mr. Kanak Mangal. He's in fact a management graduate, and it was his vision to get into this space in back in 2018 when uh, co-working spaces were getting popular, and of course. The promoters have infused a lot of equity in the company as well to bring it to this level. We are extremely low on debt, and they see a very, very bright future in this space. Let's move forward. Yeah, of course, these are board of directors. And Pooja, let's go to, yeah. To give you a brief on the industry, in fact, that is something which is very, very interesting. So overall, if we look at India, commercial spaces are spread over maybe 700 billion square feet, 700 million square feet, of which about 7% is currently in co-working space, which is maybe approximately 50 million square feet. And we look at a very, very robust growth in this sector, given the number of multinationals moving to co-working. Not only multinationals, even our own large conglomerates are actually choosing to move to co-working spaces, over their own office setups. As I mentioned earlier, the kind of saving that they have is 20 to 25%, which is fairly substantial. And going forward, with the hybrid model coming into the picture, with the flexi offices coming into the picture, um, we are looking at anywhere between a 17 to 20% year-on-year growth for the next 3 to 5 years, and maybe further. Eventually, the entire industry will move to co-working. Plus, another very important point here is the tier 2 and tier 3 cities. So, last year, multinationals hired somewhere around 1.7 million people in India, of which about 71,000 odd people were in tier 2 and tier 3 cities. And they are looking at expanding those numbers. Uh, Earlier, MNCs were India was like a favorite spot for back office, but now it's actually moving into the front office, and we see that increasing. We see that number increasing going forward. So tier 2 and tier 3 cities are also something that we have keenly set our target on, like cities like Ahmedabad, Jaipur, Indore. So we have those as well in the pipeline. Let's move forward. So as you can see, the company has had a very robust growth in financials. So our business model is such that it takes about 6 months for gestation the moment we start the center. And subsequently, once we do start a center, we are pretty much cash flow positive within a year of starting a center. So FY21, we had a top line of 3.90. Subsequently, it was 4.04 crores. And in the last financial year, it's 9.18 crores, with a huge jump in the EBITDA, simply for the reason that I said that, the gestation is about 6 months. So we eventually start reaping the fruits within, so in the following year, which is why today, following this IPO, we can see an almost actually more than 100% rise in the top line by 2025. And as you can see, even the margins are very, very lucrative and good. Let's go to the next slide. So this takes you over the revenues, as I mentioned earlier, and also talks about the EBITDA. Uh, and as I mentioned, there's a net margin in this business of anywhere between 18 to 20%, and given that we try and work on being very prudent with our fixed costs. We try and divide the fixed costs between the centers, plus we have our own staff instead of further contracting out housekeeping or contracting out the other services. So that makes it even more effective for us. And, we try and do a better saving. As I mentioned, we try and go on an asset light model. And at the same time, as far as liabilities are concerned as well, the current borrowing, in fact, that's sitting on the balance sheet is a loan taken for our fourth center, which we have purchased. Other than that, there is no other loan on the balance sheet. Let's go to the next slide. So even our cash flows are actually pretty lucrative. Again, given the quick turnaround that we see after starting a center. Here, this slide talks about the key ratios, which are also extremely good. If you look at the debt to equity ratio in the current year, it's 1.19. And in fact, even our interest coverage ratio is 5.89, which is extremely good. And if we look at the return on ROE is 40.43%. and the ROCE is 31.19% in the current financial year. And we see these numbers only improving year on year. This again, this slide talks about the key ratios and the key numbers again. So we are talking about a book value of 11.62 and earnings per share of 9.37. So, one can expect these numbers again to go up. So, just with this infusion of uh, this IPO funds, which would be about 15-16 crores, we are looking at a top line of 22 crores going forward in 2025 with a net profit of about 4.32. So, these numbers will be looking up even more going forward. In fact, now I would uh, request Mr. Govind Sabu or Mr. Janesh to take it forward.
Yeah, hi, good evening, everyone. So we are delighted to present our the first company in this entire co-working space to go public, and we are bringing a, SME IPO of this company. The shares of the company will be listed on NSE Emerge platform, and the total issue would be 16.8 lakh shares, priced at rupees 93 rupees per share. So largely, if you see that that the total issue size would be around 15.62 crores, out of which 86 lakh shares have been reserved for market maker. Uh, the NII, which is the non-individual retail investors and non-institutional investors, 50-50% is the ratio. So to NII, we present 7,86,000 shares, 7,96,800 shares, and for retail investors, we offer 7,96,800 shares. So this is an overview of the overall issue. Post issue, the promoter and promoter group shareholding would be 71.5%, and public shareholding will be 28.5%. So this is how the issue is structured. The lot size is 1,200 shares, as it is required by the regulators, and the approximate lot size in terms of amount would be around 1 lakh rupees, 1,200 into 93 shares. The total issue proceeds, which are 15.62 crores, and post adjusting for issue related expenses, the net proceeds which will be available to the company would be 15 crores, and most of it would be used for the growth capital, opening new centers, paying rental deposits, and furnishing, and largely increasing our centers and growing our centers. A small portion of around 3 crores has been kept for general corporate purposes.
In fact, I would like to add to what Govind said. So currently, we have already identified two new micro markets, one being Andheri East and one being Airoli. Both of them are thriving in activity. Airoli is becoming a very big IT hub, and Andheri East, of course, uh, is becoming even. It already was a very very strong industrial hub, but now it's becoming a more stronger commercial hub. So we have identified two places there, and we are looking at utilizing the proceeds from the IPO to set up those two centers. And currently, as we speak, we are already in talks with anchor clients as well, who would be occupying 40 to 50% of each of the centers.
So I would like to highlight that being available. So the market is huge. We have just touched the ice of the tip of the iceberg, I would say.
and whatever micro markets we can touch upon, it will be really nice for the growth journey of the company. The other thing which I want to bring or to highlight would be that it is being although being a new age business and lot of money is invested in creating market for such businesses, the company is profitable and there is an internal accrual which is also available apart from these IPO proceeds to further fire the growth engine in future in the longer run. So this is one of the critical features of this company.
Thank you, ma'am. Thank you, sir. Now we'll start with question and answer session. I request all the participants to please share your question. Yeah, we'll start with first question is from Mr. Robert. How the billing process works with your clients? Can you provide some color on this?
Sure. So, the moment a client signs up with us, we take a deposit, which is usually a 3 month rent upfront. And even the rent is actually paid upfront. There is no major requirement of working capital. So, it's,
Okay.
it's, it's very, very straightforward in that sense.
Okay. Next question is from Mr. Prem Singhania. What is the current occupancy and occupancy average rate of revenue?
Uh, so, as I mentioned, the current occupancy is anywhere between 80 to 85%. And then, of course, the moment people leave, there are people ready to take the space as well. And the average rate of revenue, as in, I didn't understand this question.
Uh, okay, we'll move on to the next question. Next question is
On
from
per
Ms.
seat
Ananya.
rent which we charge from the clients.
So the per seat rent actually varies from center to center. Like for example, in Thane, we would charge 9,000 rupees a seat, whereas in BKC, it would be in the range of 38 to 40,000 rupees a seat. It varies from market to market.
Okay.
And these are all per month.
That's right. That's right. Per month.
Next question is from Ms. Ananya. Hello, ma'am. How does the rent agreement goes for a period of 1 to 3 years or monthly chargeable?
So the rental agreements actually vary anywhere between 6 months to even up to 5 years. And then there are various lock-in periods depending on client to client. So wherever we have incurred added costs for a client, we have created a customized space for the client. There is a longer lock-in that goes in. Otherwise, the lock-in can be shorter.
Okay. Next question is from Mr. Robert. What is the typical tenure of your average clientele engagement period?
So we've actually had clients with us right from the time that we started, and they still continue. Uh, so the average client relationship is maybe about 2 years, anywhere between 18 months to 2 years till now. Yes.
Okay. Next question is from Ms. Ananya. Who would be your close competitors?
So in terms of competitors, of course, there are many, who are there in the space. Like for example, there's Bloom Desk, there's My Desk, uh, there's YesWorks, there's 603, the co-working space. There are many competitors, but the way we see ourselves different is because our services are far more personalized. Even our price points are far more lucrative to the client. And the overall ambience and feel that we provide to our clients, I mean, this is the feedback that we've got from clients, has been extremely positive. And plus, uh, like I said earlier, that we work on an asset light model. So, not very heavy on debt.
Okay.
unlike a lot of the other competition.
Next question is from Mr. Robert. Who would be your largest customer in terms of numbers of seats and revenue?
So, since we are an NDA, I won't be able to name the customer, but we have a large MNC in our Thane center who's occupying about 250 seats in that one center alone. And we get a monthly revenue of about 25 lakhs from that one client itself.
Okay. We'll move on to next question. Miss Ananya, what is your working capital requirement?
So, since we receive our rent upfront and our billing is pretty crystal clear, there is no such requirement of working capital. I mean, the only requirement in our business is capex, where we infuse money for new centers, for new fit outs, those kind of things. Otherwise, other than that, there's no working capital requirement as such.
Okay. Next question is from Mr. Prem Singhania. What are the significant events and milestones that have shaped the history and development of the company?
So, I think COVID itself was a very big milestone, which kind of also, made us see the downtrend, but also changed the entire perception of co-working in general. More and more people started moving into co-working. Companies wanted multiple office locations, given the commute times. They wanted locations which had more proximity towards their proximity to the employees residence to cut the commute time, flexible hours. So, given all of that, I think that was a huge milestone, and that kind of really boosted not only us, the industry in general, and also changed the entire perception of co-working and made more and more people kind of move towards co-working. So, we saw a very, very big shift post COVID.
So just to add on, the COVID kind of fast tracked lot of technology developments and these new age developments, which might have taken a longer period in its natural course. But COVID kind of made the corporates realize that it's time to kind of act quickly, so that they are able to catch up with the growing requirements of the corporate India. And I think that is one of the key milestone.
Okay. Next question is from Mr. Robert. What would be the revenue contribution from the top 5 and 10 clients?
So, I think about 20 to 25% of our top line, maybe 30% of our top line is from the top five clients, which would be about 3 crores
Okay.
per annum. And I think 50% of it would be from our top 10 clients, which is about 4.5 crores.
Okay. Next question is from Mr. Vishnu. How do you envision Kontor evolving in the co-working sector in the coming years? Can you provide more details about your expansion plans into new cities? Are there specific cities you are targeting?
Uh, Vishnu, we actually see Kontor becoming a leader in the co-working sector in the premium affordable space in the years to come. Of course, we are immediately looking at opening two new centers in Mumbai, but at the same time, we have our eyes set on some of the other cities, like Ahmedabad is one of them, Jaipur is one of them. We also, uh, in fact, Bangalore, Hyderabad, the options are plenty, and the demand is so high that we are actually looking at multiple things, but at the end of the day, we are looking at a sustainable growth, something which we are not looking at taking on too much debt. And the more and more cash flows the company generates, those would be infused back into the business to create more centers. And yeah, I mean, immediately Mumbai two centers, and then maybe subsequently we are targeting maybe NCR is also, Gurgaon is something which is also there on our list.
Okay. Next question is from Mr. Robert. As you mentioned that it takes 6 months gestation for one center, what is your pipeline for the next few years?
Uh, so we are looking at adding two centers immediately, and subsequently we, would be looking at adding maybe 3 to 4 centers every 6 months.
Okay. Next question is from Ms. Ananya. What is the future plan of CapEx?
So as of now, we are looking at the IPO proceeds of obviously coming in, which we are looking to infuse back into the system, and following which, as far as capex is concerned, whatever surplus cash flows come into the system would be going into capex. Uh, and of course, when the business grows forward, maybe we do think of a pref round later to raise additional capex, and see, debt is also something which may be an option later, but it's not something which is on top of our list.
Next question is from Ms. Ananya. Where do you see the company in 5 years down the pipeline? Down the line.
So 5 years down the line, we look at a top line of anywhere between 90 to 100 crores. That is what we envisage for the business. With a pat of, with like a 17 to 20% kind of a pat.
Okay. Next question is from Mr. Robert. What is your role, Miss Kannan, at Kontor? As I see, you are not the promoter of the company, and we haven't heard from promoter that is this a professionally run company.
Absolutely. This is a professionally run company. I am somebody who is a chartered accountant and have a financial services background. So it's a completely professionally run company. The promoters are also, the promoter is a management graduate, and he's somebody who kind of prefers to just be the brain behind the whole business and kind of works behind the scenes. But of course, we are here to kind of run the show on a day-to-day basis.
Okay. Next question is from Mr. Vishnu. Could you provide examples on of how you plan to refinance center loans to lower borrowing cost and improve cash flow?
So currently, we just have a property loan which is already at a very low cost. We don't have any other debt as such. So, there's no question of bringing down the cost of finance, because we don't have any additional cost of finance.
Okay. Next question is from Mr. Bimal Gandhi. What capacity addition you want to make from current 1200 seats in next 3 to 5 years?
So immediately we are looking at adding about 7 to 800 seats more after the IPO. Subsequently, we are looking at adding maybe anywhere between 800 to 1,000 seats every 6 months. So we are looking at making this 1,200 seater into maybe 12 to 15,000 seater in the next 3 years,
Okay.
3 to 5 years, yeah.
Next question is from Mr. Robert. What is the average monthly rentals payout for all the properties put together?
Average monthly rental payout. I wouldn't be in a position to give the precise number as of now.
Okay, we'll move on to next question.
Yes, please.
Mr. Vignesh Ahuja, can you tell about what is the reason for a sharp rise in revenues as well as profit?
Of course. So what happens is, the like I said, the moment we start a new center, of course, there's capex that goes in, and uh, it our break even would be anywhere between 60 to 65%. So the moment we reach a higher efficiency, obviously the profitability increases, because so even in terms of depreciation, we use the simple straight line method where that is concerned. So that also obviously adds to it, and just the overall cost efficiency. We try and keep our costs low, and we try and maximize in this with the space efficiency is also something which we really try and optimize with, so that overall kind of brings profitability up.
Okay,
So
And then
just
of
to
course
add on,
we
a
added
couple of things.
yeah.
Couple of things. So there are two parts to sharp rise in revenue as well as profit. One is that the overall capacity increased in the last year. That gave a larger revenue earning availability to us. And secondly, what happened is that our utilization increased because in COVID, our utilization was little lower. And as we came out of the COVID, our utilization levels increased. So any increase in marginal utilization is a direct bottom line, or not a direct bottom line, but a disproportionate bottom line in this business. So as Ms. Kanan said that apart more than 65% of occupancy, kind of our fixed cost remains same, and this marginal increase gives us a lot of operating leverage. So these are the two reasons. One is the capacity, higher capacity availability, and higher capacity utilization, which increased revenues, and operating leverage, which increased our profits disproportionately.
okay. Next question is from SSED Out Services Private Limited. Are you guys also providing services like virtual
Yes, we
offices?
are. We are providing services like virtual office as well. In fact, that is one of our services. So, in fact, I had mentioned also earlier during our talk that there are a lot of people who need a proper address. They need somebody to receive the mail. They need somebody to answer calls on their behalf. And not only that, whenever they have meetings, they use our facility in person as well. But yes, we do provide virtual offices.
Okay. Next question is from Mr. Vignesh Ahuja. Are FY23 EBITDA and net profit margin sustainable? What is the profit margin outlook?
So definitely, they are sustainable. Going forward, like for FY24, we are looking at a top line of about 12 crores. There would be a slight, the PAT would be slightly affected by maybe 2-3%, uh, because obviously there would be capex, there would be these two new centers added, and we would see those numbers reflecting in FY25, because by then we are looking at a top line of about 22 crores with maybe a PAT of 4.3%.
Next question is from Mr. Vignesh. What are your competitive advantages and give three reasons why one should invest in your company?
So one very important reason is that We are extremely conservative. At the same time, we are aggressive, which means that even though we are looking at growth, we are looking at a sustainable growth, and we are looking at consistency. This is one very important factor which makes us different, from a lot of the other uh, companies in the business. So anybody investing with us would definitely be moving towards wealth creation in the future, because we believe that you have to take people along with you and grow.
True.
That is one very very important point. And then of course, the other factors are, uh, the different micro markets that we are targeting, which we are envisaging a huge upside. And given our experience, and given the way we've been running the business itself, is proof enough.
Just to add couple of points, it's a very interesting question actually. The reasons why you should invest in the company. So I'll give you our understanding of the business and of the company, and which investors can also align with us. So one is that it's a huge market opportunity. So there is a huge growth platform, growth runway which is available for the company. The business is very niche, new age. Lot of transformation and migration is taking place where corporates don't want to take the responsibility of their this managing office, which is a non-core operation for them. And so there is this migration, like what has happened in Western countries. The trend, the mega trend, should come to or have started in India also, and we see a long runway for this. So one is the opportunity part. Second part is the company's focus on sustainable growth, uh, being mindful of profitability and capital efficiency. So we are kind of doing a healthy EBITDA margin, operating profit margins, and huge capital efficiency. So if you look at our return on capital employed and return on equity and all those factors, they are quite healthy. So management is kind of mindful of a sustainable growth, unlike the other peers who kind of have kind of gone the other route. And third is the capital allocation, which is always growth oriented, uh, disciplined approach towards capital allocation, deploying the accruals in back in the business, back in the growth of the business. And I think this IPO will give the company a sustainable growth cash flow for a long time to come. So I think this is what our understanding has been of the company. The numbers, uh, whatever in future the numbers can come, cannot come. These are all maths after all, but the overall ecosystem is quite encouraging. Thank you.
Okay. Next question from Mr. Robert. What is the average cost of setting up a one desk in your all the centers?
So if we talk about a per square footage cost, we are talking about anywhere between, you know, about 3 to 3,500 rupees a square foot. That would be the cost.
Okay. So next question is from Mr. Bimal Gandhi. Are existing space on lease or owned? If one lease, what is the average rent payable for all properties?
So yeah, as we prefer an asset light model, most of our places are leased out. Um,
Okay, we'll move on to next question. Miss Neha Sharma. How is the Indian co-working space market's growth trajectory shaping of shaping a favorable environment for Kontor Space Limited?
Well, since we are part of the industry, definitely, the entire co-working space boom is surely something that we are also enjoying. And this boom is something that we don't see stopping in any way. It surely is going to be sustainable for the next 3 to 5 years and maybe even longer. Like Govind mentioned earlier, that the entire domino effect of what has happened in the West is kind of happening now here in India as well.
So I think the good part is our understanding about the company and its business is that uh, fortunately, and it is the good part is that there is no problem of demand. So demand is
Absolutely.
quite there. It is the way Miss Kanan and her team would is executing the entire business growth, and so from the industry perspective, uh, there is no problem of demand. Only the way they are executing in choosing the micro markets, in choosing their service offerings, engaging with the clients, and all those things. These are, I think, the key things which can kind of turn the ship in their favor.
Next question is from Mr. Robert. What would be total number of clients you would be having, including small and large clients?
So we have more than 150 clients. This includes a mix of multinationals. It includes startups as well as MSMEs.
Okay. Next question is from Mr. Abhishek Yadav. Could you elaborate on the specific services that Contour Space Limited provides in the commercial space leasing and managing sector? What sets them apart from competitors?
So, in the different kind of setups that we have dedicated office spaces, which we kind of customize for our clients. And in addition to that, we have shared offices and we have individual desks. Plus, we have confined spaces and we have virtual offices and managed offices. So, what really sets us apart from our clients is the overall kind of the service that we provide. The service is more personalized, because we are not that large, and the focus is more micro than macro. We believe more in giving an individual personalized service, and which is why even the kind of duration of our clients is pretty long. We've had people working with us, in fact, since the last 3 years. Some of our clients are as old as 3 years and even 4 years since inception of the company.
Next question is from Mr. Robert. What is the average time that is needed to get all the initial investment back that would go into setting up the centers?
So from the time we start a center, it would take about 6 months, for the center to kind of get up and running completely. Uh, and by then, we even look at achieving a 65 to 70% occupancy or even more. And the 6 months after that is by then, we see the initial investment coming back. So maybe 12 to 18 months is the duration taken for the initial investment to come back.
Okay. Next question is from Mr. Abhishek Yadav. What is the company's value driven approach and how does it guide the organization business strategies and decisions?
Uh, well, I think overall the fact that we are conservative and very prudent with the way we manage the business in general is something that is a very value driven approach. We are very, very rooted to having a sustainable growth and something. So we are not very brash with our decisions. And at the same time, in terms of strategies and decisions, we kind of there are so many of our brains working together. So we do a lot of brainstorming, ideation, which is done even with our board members involved. Uh, and thankfully, we've been very lucky with good people on board. So the ideation kind of translates into the strategy then. So this IPO is in fact part of that whole ideation and strategy, and even the decision making is kind of a combined effort.
Okay. We'll move on to next question. Next question is from Mr. Robert. What is the status of the Ford Center as mentioned in prospectus? One of the large clients had left.
No, in fact, the Ford Center is a managed office, which is a long term lease by a single client, and they're still pretty much there with us.
Okay.
So,
Okay, we'll move on to next question.
yes, please.
Next question is from Mr. Robert. As you mentioned, 100 crores revenue in next 5 years. How many centers or seats would you need according to your current average setting cost?
So, in order to achieve this number, again, since every center would have a different kind of a revenue because the average seat at which it is rented out itself is different. But the number of seats that would be needed would be about maybe 15,000 seats.
Okay. Next question is from Mr. SSED Out Services Private Limited. Please update about virtual office address selling. Are you doing that?
Oh, yes, we are. In fact, if you're interested, you can get in touch with our team and, they'll surely guide you through the whole process.
If yes, how many clients of such nature you have right now?
In the virtual office space, we have a limited number of clients. There aren't as many, but that service is available, for whoever is interested.
Okay. So next question is from Mr. Pritesh Vora. Rent to revenue ratio. First question. Second question, what is the commitment to be given to real estate companies, fixed or variable in nature?
So the rent to revenue ratio would be about maybe about 45%.
Okay. And what is commitment to be given to
Real estate company.
real estate company, fixed or variable in nature?
I didn't get this question.
So it is typically fixed rentals which they have
Okay.
contracted.
Yeah, yeah,
Just
yeah.
to
Of
answer,
course.
yeah,
Yeah, yeah, yeah.
it's not a percentage of revenue or
The
something like
rentals
that.
are fixed. Yes, that's right.
Rentals are
No, but
fixed.
then
Yes.
again, Gobind, there are going forward. I mean, we also are open to kind of tying up with owners in the managed office space to do kind of
Okay.
different model. So it could also be variable by nature.
Got it. Absolutely.
Okay. Next question is from Mr. Prateshwara. What is the total square feet and rent to be given to real estate? Square feet realization, square feet for you. How many total property? What is the manpower cost? Who pays for utility bill, etc.?
Okay. What is the total square foot and rent to be given to real estate? Realization per square foot. Okay, the first question, Gobind, maybe you can.
The
What is the
total
total square?
square footage of all the four centers I think
Total square
combined
footage is
together,
about 46,000 square feet.
46,000 square feet. Yes,
Yes,
yes, yes. And it's spread across four centers.
that's right.
Our manpower cost is around 2 crore rupees per annum.
No, no, no. It's much less than that.
Much
It's
less.
much,
Okay.
much, much less than that. In fact, it's under a crore of rupees.
Okay.
Okay. And
And
who
And
pays for utility bill?
we pay the utility bills on behalf of the clients. So for the client, it's a landed cost. It's a single cost. You know, they don't have to pay for Wi-Fi separately, utility bill separately. It's one single cost.
Okay, got it. Thank you. We'll move on to next question. Pritesh Vora, is there any FNB or other revenue? What is capex seat and capex square feet for the furnishing, etc.? Who files AC? Who fits AC? Fail selling, etc.
So,
Fall ceiling,
yeah,
etc.
sure, sure. So, we actually get a caterer to manage the pantry, uh, and that is something which is managed by a professional catering company. The capex cost per seat and capex cost per square foot is something that I mentioned earlier. It's 3 to 3,500 per square foot, and we actually do the entire fit outs, not only of the space, but also of the AC, whatever false ceiling, the ducting, everything, the civil, all of that is taken care of by us. The electricals and civil and everything.
Okay. Next question is from Mr. Robert. What are the other business interests of the promoters apart from this venture?
So, apart from this venture, the promoter group is active in real estate. They are active in commodity trading in a very big way.
Okay. Next question is from Mr. Robert. What would be rent difference for clients between you and gains like WeWork, FSCs, Quest, and
Office
others?
request, right. So I think the rent difference would be anywhere between 15 to 20%.
Okay. We'll move on to next question. Next question is from Mr. Sagar. What is the average per member operational expenses? And can you give a brief breakup? I want to understand how EBITDA is arrived at, as you already mentioned, per seat price for Thane and BKC.
Okay, so average member operational cost. So I mean, we have a team at the moment of about, I think, 12 people. And in addition to that, we have a housekeeping staff and maintenance staff. Uh, I would be in a position to give the exact operational breakup per person, but the overall employee cost, like for FY23, was actually pretty low. And how
So
understand how
I'll
the
give you a brief flavor of what people are asking around expenses. So there
yeah,
are repeated questions. So
yeah,
in FY23, our total operating expenses were 4 crore 81 lakhs, which is around
that's right.
5 crore rupees. The
Right.
major
Is rent.
expenses were rentals.
Absolutely.
Uh, they were around 2 crore 76 lakhs. The other major expense was electricity, which was around 36 lakhs, and repairs and maintenance, which is around 40 lakhs. So these are the two major expenses apart from rentals which we have to pay. Then there are some promotional expenses, marketing expenses, which are around 30 lakhs. So this is the broad breakup of 4 crore 81 lakhs, which we had to pay uh, for operating these centers. And the employee cost apart from this is around contractual and everything put together. It was around 65 lakhs in 23 FY23. So this is the kind of broader expense breakup, which I think everybody is quite keen to ask. So this is what the status is.
Okay. Next question is from Mr. Robert. To run one center, you require how much manpower?
So, including housekeeping and our admin staff and everything, I think we would require at least 25 people.
Okay.
But then they are also in rotation because our
Okay.
centers run 24 hours.
Next question
So
is from Ms.
in
Neha.
amongst these 25 employees, quite a few of them are contractual. So like
That's right.
housekeeping and other things, yeah, facility management services are there. So they
That's
are
right.
not on our rolls.
Okay. Next question is from Ms. Neha Sharma. How will the net proceeds from the IPO be allotted and for what purpose?
So, about 80 plus percent of the proceeds would go in opening two new centers. As I said, we've identified two new micro markets, one being Andheri East and one Airoli. And we have also identified the spaces. And the remaining, maybe 20% would be for general corporate purposes.
Okay. Next question is from Mr. Robert. Any estimate how many co-working seats would be available in Mumbai MMR region, and if you have insights on others region and strong corporate culture with strong corporate culture?
So I think, see, I would be able to give you a pan India kind of a number in terms of square footage instead of seats because there are centers opening every other week now. In fact, at the rate at which growth is being seen in this sector, so there are about maybe 5 million square feet of space at the moment, which is being occupied by co-working spaces.
Okay, next question is from Miss Anita. Can you elaborate on your eco-friendly measures and how they align with your business physiology and customer preference? Philosophy, sorry, business philosophy and customer preferences.
Okay. Uh, okay. Eco-friendly measures. I mean, as far as possible, I think we try and be, friendly to the environment in the best of our capacity. Uh, we recycle our waste. Uh, and in terms of business philosophy and customer preference, of course, we also try and promote uh, an eco-friendly environment in our co-working spaces.
Okay. Next question from Mr. Saurabh Gupta. What factors contribute to the consistency high average occupancy rents at your existing centers in Thane and Pune?
I think client retention is a very key factor which has helped us in high occupancy levels. The fact that we've been able to retain our clients, and then plus we've seen a huge boom in the demand with more and more MNCs coming in and wanting space.
Next question is from Mr. Saurabh. For the center in BKC with NA occupancy, could you explain the current status and any plans for utilization?
Sure. So our BKC center is actually just it's the newest center. It has just opened about a month ago, and we're looking at about 120 seater over here. We have already signed up three leases with three different companies for this space, and we are looking. We actually have a huge pipeline. There's a lot of demand, and we are currently in the process of customizing the space for our clients, which is the reason why we've put NA for the occupancy, because it's kind of getting filled up as we speak.
Okay. Next question is from Mr. Robert. Finally, my last question. What is the meaning of word contour? And all the best for the IPO.
Uh, Thank you, Mr. Roberts. So the word contour comes from, the origin is German. It's like a place of work, a commercial place, and that's where we got the meaning from. So it has a very relevant meaning behind it. It's not, a word that just came out of nowhere. And thank you so much.
Mr. Sagar Parekh, I have few concerns on the point of co-working space boom for next 3 to 5 years. How to company will navigate after the boom so to avoid WeWork fiasco?
Fiasco, yeah, sure.
Fiasco.
So WeWork actually, had a very brash approach to the whole business. They kind of over leveraged and went on a super fast expansion spree. There was no proper planning behind the entire, of course, they had a lot of access to investor capital, but there was not enough prudence which the promoter practiced. And that is what makes us very different, our conservative growth plans, and, just the general approach that we're looking at sustainability. So we're looking at growing gradually, instead of just expanding left, right, and center, because that is the right way to go about. So I mean, we were there would be no comparison at all.
Okay. Next question from Mr. Mitesh Kundar. Can you provide more insights into your space as a service business model and how it differentiates Contour Space Limited in the co-working industry?
So we are a service provider at the end of the day, and the service that we provide is the space, which is why the space is a service as far as we are concerned. And what makes us different is, again, our conservative approach, our personalized service, and us giving uh, premium premium facilities at affordable prices to our customers, and that is what kind of differentiates us from the other players.
Okay. Next question is from Mr. Robert. You would be 15 to 20% cheaper than bigger players, in my understanding. Is correct.
That's right. That's right.
Move on to next question. Mr. Pritesh Vora, you mentioned
Uh,
for
yeah,
you
so we have
mentioned
1,200 seats at the moment, spread over about 46,000 square feet.
okay. Next question is from Mr. Pritesh Vora. 35 lakhs electricity bill mean and 35 lakhs month looks very low. 3 lakhs.
Well, that is what the numbers are. So, I mean, I'm sure as the centers go up, that number would increase. But as of now, this is what the number is.
Next question from Mr. Chetan Shetty. What are your strategies of accommodating the diverse needs of both startups and large enterprises in your co-working spaces?
So we have spaces right from a single seater cabin to even a single desk if somebody needs, which maybe a single promoter run startup requires. But at the same time, we have larger enclosed spaces going up to 250 seats for the larger enterprises. So, I mean, of course, we try and accommodate our clients as per their requirement.
Next question is from Mr. Robert. For your interiors and furniture requirements, do you have any fixed vendors and having any long-term contracts with them?
Sure. We do. We have fixed vendors who we work with, and we try and retain those vendors because the long term relationships are something that we prefer.
Okay. I think we have covered majority of questions. So we'll conclude now.
Thank
Thanks,
you
Ms.
so much,
Kannan.
Pooja. Thank you.
Yeah, thanks, Ms. Kannan, Mr. Jignesh, Mr. Govind for giving insights about the company and IPO to the investors community. And thank you, investors who have participated for the IPO roadshow. Thank you.
Thank you, everyone, and we look forward, to everybody's support for this IPO, and we look forward to creating Kontor into a leader in the co-working space industry. Thank you.
Thank you once again. We'll conclude.